The British grocer Sainsbury has agreed takeover terms with Walmart's Asda. The deal values Asda at around £7.3 billion, with Walmart owning 42% of the combined entity, but a lower percentage in terms of voting rights. Kevin O'Byrne, Sainsbury's CFO, joins us now from the London Stock Exchange. Kevin, very good morning to you. A busy weekend, busy morning for you. Could you start by just explaining why is it so important for you to be bigger? You're trying to take on rivals in the discount sector, the likes of Amazon. Why do you need to be bigger on the high street?
Look, the UK market has changed dramatically, hasn't it, in the last 10 years, with so much choice for customers and so many new entrants coming in, the discounters, online players. So it's a very dynamic time, and hence the benefit of combining these two great UK businesses, Asda and Sainsbury's, to create a stronger business, which we believe will be better for customers because we can lower prices on the shelf, better for our colleagues, better for our suppliers, and of course, very good for our shareholders.
You say combining. You're taking over this business, though, it seems, in many senses. The Sainsbury's board will be running things. Asda keeps a CEO, but he reports to the Sainsbury's board. Why does Walmart want to retain, do you think, this 40% or so shareholding in the group?
We're delighted that Walmart are going to be a major shareholder in the business going forward, and we're looking forward to working with the Walmart team. Walmart will have some non-exec directors on the board, and this is not a takeover. This is a combination of two great businesses. The management teams will be made up of the best of both businesses, and we'll run two separate head offices and a dual brand strategy in the UK.
Doesn't that provide a little bit of confusion? Aren't you going to want to have laser focus here on giving the customer what it wants and making profits for the shareholder?
We will absolutely have laser focus on giving the customers what they want. You're absolutely right. We've got two great brands here who have very strong heritage, have been in the UK markets for decades, and have very loyal customer bases. And what this transaction will allow us to do is to make Asda an even better Asda and Sainsbury's even a better Sainsbury's. And then the benefit for the UK consumer is the cost of products on the shelf will go down.
Don't you want, though, then, Kevin, to have a clear leader running this business? I mean, the idea of mergers of equals, in the past, they have historically failed fairly miserably.
We're very confident in the leadership structure. We currently already have in our business, we have a bank, we have Argos, we have Sainsbury's, and we run them as independent businesses in the group. And Asda will sit alongside that on the operating board with its own management team. And the important thing about that is that we can have, to your earlier point, a really laser focus on what is it that the Asda customer wants, what is it that the Sainsbury's customer wants, and to give them that. So we think we'll get greater focus from keeping the two great brands.
Kevin, have you had any signals from regulators as to how they will approach this, what concessions they may look for, how many stores you may have to close as a result of this?
We'll start to engage today, as you can imagine, with the regulator. The regulator has a very important job to do here. Their role is to protect the UK customer and ensure that the choice is there for the UK customer. And we've done a lot of work, as you can imagine, behind the scenes with our teams looking at this. And we believe this is very good for the customer, and we look forward to explaining that to the regulator. If you look at the market has changed dramatically since the last time the regulator would have looked at a deal like this. Enormous consumer choice, lots more players in the marketplace with online and discounters, etc. And then if you look at the geographic spread of these businesses, there's a pretty perfect match across UK geographies where Asda are strong in the Midlands and North Wales and Scotland. Sainsbury's are stronger in the South East and in Northern Ireland. So it's a very good match.
It's a good match in that sense, Kevin. So where do the synergies come from? You cite £500 million worth of synergies, I think, this morning. So where are they going to be driven from?
Yeah. There's three buckets of synergies, and that's a net number. We've got synergies from buying goods that we don't sell to customers, so buying whether it's electricity, media, etc. We've got synergies from putting Argos stores inside Asda stores, and when we do that, we take out rent and rates, and we've got a very good track record of doing that in the Sainsbury's business. And then there's synergies from harmonising our buying book. So where one business is buying a particular product cheaper than another business, combining those buying books and getting lower prices, which then we can obviously invest in the business and give customers lower prices.
Kevin, that's all part, of course, of the strategy to take on Amazon. But Amazon has a real benefit in its online presence with its Prime membership. What are your plans to take on this online retailing behemoth on that front?
We compete, as you can imagine, heavily with Amazon, particularly in general merchandise, not so much in food in the UK. Our Argos business, for example, in the UK has the fastest home delivery service. We call it Fast Track. You can order and within 4 hours you can have products at your home on the same day or the next morning in more postcodes than anyone else in the UK. So we're very alive to the competition, and we think competition is good for the customer, but clearly we're very focused on competing with Amazon and with other new entrants in the UK markets.
Do you see yourself expanding then beyond the borders of Great Britain, or are you focused solely on that market?
Our focus is on the UK market.
The focus is on the UK. You're busy enough there. Let me ask you about shareholders.
Absolutely.
What soundings? Our reporting suggests that the Qataris, the sovereign wealth fund, big shareholders, are in support of this. Can you confirm that and give us any other feedback you've had from shareholders?
That's right. They have confirmed in the statement today that they're supportive of the transaction. We're delighted about that. We will start having discussions with shareholders over the next few days, and we think we can give a compelling case why this is good for shareholders, and we look forward to having those conversations.
What do you think about further M&A action from here? I mean, you're going to be now the biggest leader in grocery retailing in the UK. Is there any scale, any scope to add more?
We've got to focus on what's in front of us. We've got a lot to do in the next 18 months or so to complete this transaction. And we think it's really, as I say, a good transaction for shareholders, good for our customers, good for our colleagues, and that's going to be, as you can imagine, getting a lot of our attention in the next 18 months.
And you'll be dealing now with 330,000 employees. It's a massive headcount. Where do you see that number going in those 18 months?
Well, look, this is putting these two businesses together, combining these two great brands really makes this a very strong employer. We will have a much stronger balance sheet after this transaction when we come together, very cash generative. So that's got to be good for employees from a point of view of career opportunities. We have no plans to close any stores, subject to obviously discussions with the regulator, and we'll keep two head offices. Asda will run from their head office in Leeds, and Sainsbury will run from the head office in London. So this is good for employees. And on top of that, these two organisations are responsible for 300,000 pension holders, and both sets of pension holders will be more secure after this transaction.
Well, you have then, I mean, you're going to keep the separate brands open. What will you do in order to sort of win customers at the Sainsbury brand, which is, geared more towards more well-to-do, I guess, shoppers compared to the Asda brand, which is geared more towards the lower price, people seeking lower price goods?
Well, all customers are looking for great value. They're looking for good quality and improving quality, and they're looking for convenience and ease of shopping. And by combining these two great brands, by putting these two businesses together, we've more resource to invest in all of those areas, whether it's technology, etc., to make it easier to shop with us, whether it's improving the quality of the products on the shelves in both of the businesses, and most importantly, this deal will be good for UK customers because it will reduce the cost of living in the UK.
Kevin, this gives you really a lot of firepower when dealing with your suppliers. Obviously, the bigger scale helps you negotiate. Are you going to be able to squeeze a lot of savings out of those suppliers?
Look, we work very closely, as you can imagine, with all our suppliers. And what we're proposing to do here is to harmonise the buying book. So if we're buying a particular product for a certain price with one of the businesses, we would expect to have the same price in both of the businesses. And if you stand back and look at our business, we have thousands of suppliers, but about 100 suppliers make up 85% of our business. So clearly we'll be working with those. But there's real benefits here for the supplier as well, because they get the opportunity to have a very efficient, large route to market. They get the opportunity to list all of their wide range of products. It's a great platform to launch new products into the market. And, for a big multinational, having a very efficient supply chain is very important. So there's opportunities for both, for all our suppliers in this transaction as well.